What's up, guys? Welcome back. It's been quite a while since we've seen each other. I think the last video I posted was like 2 months ago. I've just been really busy teaching and just focusing on my own trading. But hey, I'm back, and hopefully, I'll be posting a video maybe once a week or once every 2 weeks. We'll see how it goes. So, I've noticed my videos have been really long. And I don't know, that's just me, eh? I tend to start a video on a certain topic and then I just go on like 1,000 tangents. Um, I don't necessarily see it as a bad thing because I put a lot of information, and if my video's topic is about, there's some topic, but in the video I cover a lot of different things. So for those of you who have or who haven't watched it, watch some of my videos and you're eager to learn, then yeah, check my videos out because there's a lot going on and there's a lot to learn in them. Take your time with them. The more thorough you are, the more you will be able to, get out of the videos. So I'm gonna try and keep this one short and sweet, hopefully. I wouldn't say I want to focus on a strategy because I'm not really a strategy type of guy. I mean, I am, but I like to look at price holistically, and I don't necessarily like to just jump into like, okay, this is an entry model because there's a whole lot of other things going on in the chart. For me, the narrative of price is so important. That's why I don't really believe in a one size fits all type of approach, or like, okay, this is the entry model that you take on the 5 minute or whatever. But yeah, there are things that can, simplify your trading. Everyone is different, everyone has different styles. But yeah, I'd like to accommodate, and I'd like to just, make this one a bit short, a bit sweet, get to the point. So today, what I want to do is discuss trading gold during the New York Killzone. Okay, so what is the New York Killzone? Let's go to 15 minutes. Look, the New York Killzone, and this is the Forex Killzone, not to be confused with the stock index Killzone. So it's basically the period in the day which you can say is the optimal time to trade, US instruments and gold. If we look at the top left corner, XAU USD. So USD is the base currency. So this is 100% a US instrument, right? So being a US instrument, it's obviously better to trade it during the US session times, right? So for gold aligns quite nicely with the Forex session. So the Forex session starts 2.5 hours before the stock index session, right? Which begins in the US New York time. It's 9:30 in the morning. So the Forex session starts at 7 a.m. in the morning, right? So the kill zone is basically, the Forex kill zone is basically, we can say it's the optimal time to look for trade setups and to execute trades when it comes to gold or currency pairs, which are US currency pairs, such as Euro USD, GBP USD, USD JPY, AUD USD, all of those, right? Okay, so with the kill zones, look, TradingView makes things easy for us because they are indicators that can help us. So yeah, I have an indicator, right? You search it in your indicators. I'm gonna put it on quickly. Forex kill zone, NY and London. Forex, right? Not the stock kill zone. Or yeah, not the stock market kill zone. The stock market kill zone is more appropriate for if you're trading Nasdaq, US 30 or S&P 500. But the Forex kill zone is better for gold and, like I said, currency pairs that are US currency pairs, right? So yeah, I'm using Forex kill zone, NY London by Trade Opinion, right? So check that out, right? Let's just look at this. This is on the 15 minute on gold. Let's just look at the kill zones, the New York kill zone. We're not going to focus on the London kill zone. We're just going to focus on the New York kill zone, and we want to just look at each of or a couple of them just to show you how it is the optimal sort of time to trade gold, right? So here we can see, I don't know if you can actually read this. This is New York kill zone start, and here's New York kill zone end. So this period here is the New York kill zone, right? This period here we can say is the London kill zone. So if we just compare it, look at the London kill zone. Look, it's not bad. London definitely gives decent moves for gold. But if we just look at this New York kill zone, we can see there's clearly a lot more volume that comes into the market. There's a bigger move. This you can say is a major move for the day. On this day, this being Friday the 16th. Now if we go Thursday, we see the same thing. See here's New York kill zone. This period here, we can see a lot of volume in this period. Compared to this period being London kill zone, kind of choppy. Still tradable. This is, remember, 15 minutes. So 5 minute, 3 minute, 1 minute, we can definitely catch some decent trades in here. Looking at the previous day, here again we can see New York kill zone. We can see the volume comes into the market. The major move occurs here. London kill zone, quite choppy. Going further back, we see a major move occurring during New York kill zone, whereas London, quite low volume. Going even further back, right? Yeah, New York kill zone. Bigger move, stronger move in the day compared to this period being the London kill zone. And yeah, we can see if we go, we can just keep going and we can see there's always a lot of volume that's coming in during this New York kill zone. So by these, I mean, how far back did we look now? We look basically a week. We can look even further and we can see that, like, yeah, we can see another day before that. Massive move during the New York kill zone versus the London, just sort of consolidating. Yeah, as well. So yeah, you can see on this day, London did not give a bad move. You see this move, this range here that occurred during London. And then here's the range, New York kill zone. And this is still during New York. This is just later on. But we can see most days, I would say 4 out of 5 days in the week, the major move is occurring during New York. I would say every day actually. But yeah, so this indicator, you can just use it to show you where it is. It's also going to depend where in the world you are. I'm in South Africa. I'm sure a lot of the people that are watching this are also in South Africa. So this session or this kill zone in South African time is 1 p.m. in the afternoon till 4 p.m. in the afternoon, right? So 1 to 4 p.m. So that is like a 3-hour window period. So like I said, ideally, if you want to really optimize your trading for gold, you should be looking at this period. So if you're going to trade gold, you should ideally be preparing before 1 o'clock. So maybe latest like 12:30 to see what's forming, and then look for a setup to form within this period, right? Okay, so I don't want to do too hectic of a higher time frame analysis, but we just want to sort of see what's happening. We want to just look at this day being Friday. If there was a move to catch, a trade to catch. And I want to just see a little bit in the past what happened. Okay, so this was Thursday, this day here, when we broke down lower here, right? We swept these major lows. You see here, major lows we can say for the week. This was the low of the week. This was on Monday. No, this wasn't for the week. This was a couple of weeks. But yeah, we can see here's a low, relative equal low, relative equal low. So this is clear inducement, right? Creating a support. So yeah, price sweeps these lows, makes a lower low in price, right? This impulsive move we can say is coming from here. Or we can say this is the significant high for price to respect in order to still respect this bearish break of structure, because remember this is a lower low. Here's a low, we come lower, we make a lower low. So here we have this high being an inducement, right? So let's put some dollar signs on top there just to indicate inducement. We can also use the fib. I'm sure you guys all know the trend is your friend. Or I like another friend, right? It's just been, it's been a friend of mine. And I would say the fib is your friend. Like really, the fib is so important. Everyone knows the fib. Everyone, retail traders, it's like one of the foundational confluences that we all learn about. But I've come to realize that there's more to the fib than meets the eye. There's a lot, yeah, there's a lot that can go into it on all time frames. But anyways, the fib is your friend. Okay, so we just want to get an idea of where price is, right? So we made this lower low, swept this liquidity. This was major liquidity because this was like more than a week of price action. And you can imagine below these lows, there was plenty of stop losses that accumulated below here. Retail stop losses, right? So major liquidity was taken here. If major liquidity is taken, I can tell you I'm not going to go too far back. But this is mitigating within a daily point of interest, right? Now that we're mitigating into a daily point of interest and we're acting really strongly, the bearish reaction is most likely going to come above liquidity. That's why I have this high marked out. This is too clear. It's too much of an inducement into this. Okay, so I want to show you guys a little bit of something else, right? So if we're looking for this liquidity to be swept, this high here, right? But we're looking for this one to potentially be respected. In this period, in this area, we should be looking for something, right? In this area that I've marked out here. Okay, so let's cut this off because we want to go straight to the 1 minute. Remember, this is the 1 hour time frame, but we want to look in here because as we can see, let's take this away quick. As we can see, all we're seeing is wicks here, right? We're not seeing any type of significant point of interest. We can get a bit deeper. We can say that, okay, wicks are inefficiencies, which they are, but that's a whole other topic. So I'm not going to say that this is a fair value gap because then people are going to fight me. But I can say it's basically equivalent to it in a sense. But okay, let's cut it off because we want to hop straight to the 1 minute to see if they within here are there any unmitigated areas, either fair value gaps, order blocks, or something, right? So let's hop straight to the 1 minute, right? Cool. So we in this area we can see two zones, right? We can see this one. So we're just gonna box it out like that. How did I box it out? Well, we can see it's an unmitigated. You see all of this fair value gap. We broke this low here. Broke it. And we haven't mitigated into this. You see this is clear inefficiency in the zone. Besides that, okay, in this area here, this is all mitigated. We don't see any fair value gap or anything. This is quite an efficient area. But to the left of it here, we can see. So we're gonna actually take this like this, pull it across, and also pull it down like that. So in that area, remember we boxed out this whole area being just two sort of long wicks on the 1 hour time frame. But now on the 1 minute we can refine it to two specific zones, right? Two specific unmitigated zones. How did I identify them? Well, I'm just looking for something untested zones. So here we have fair value gap with order block on top. And then here as well, fair value gap, the order block, right? So these we want to just pull across. Okay, let's jump back to 1 hour maybe. Let's pull these across. Till where? Let's just pull it till right here. And this one, and let's see. Let's just go back to current price. This is Friday night, not Friday, Sunday night. So market is still closed. Okay, cool. So here we see. Remember, we boxed out this entire zone. How did we box it out? Well, it's just a liquidity from this liquidity to this liquidity, right? And we boxed out this entire zone. Why did we do that? Just as a reminder, we broke these lows. Where are these lows? This one. We broke it. Lower low in price. We can follow price even more. Okay, let's not get too deep in that. But we can just say that this here is a clear bearish order flow being respected. Let's just look quickly actually. We can actually see here is actually the low. Major low that was broken. Cool. So besides that, we also have this here, which has not been reached yet. But I would definitely look at this Monday. See what happens. Because if we're taking this low, here we break it here. The high that's associated to this low is over here. So yeah, we can actually sweep all of this liquidity because now this is like inducement, similar to how this was inducement. So price can actually come up, sweep all of this, come into this point of interest here. If we look closely, we can see the fair value gap. Okay, let's pull this. There's a fair value gap with the order block, right? So this is an unmitigated zone which price can definitely come into. We'll see on Monday. Okay, but yeah, when we broke this one as well, we identified this liquidity and we identified this high. So we looked between here to see if there was any unmitigated zones, right? Cool. So we can see when price came into both of them, here we came into this one. Quite a good reaction. This is on the 1 hour. So from this, let's see how much this reaction was. We came down. This was about 75 pips. And then from this one, from this high, we moved down about 100, almost 150 pips. So quite strong reactions from both of them. Okay, cool. Let's take this away. Now let's go back to the 15 minute. Remember, we're focusing on, okay, let's go back to the 5. Let's go to the 5 minute actually. See more details, right? So let's put our indicator on, this Forex Killzone. So now we're seeing what? Here's the New York Killzone starting. Make it bigger. And here we're just building confluence, right? I'm not going to jump back and then remind everyone of what we were looking at. We've done it a few times now. We know where we are now, right? This gray box, remember, was an extreme point of interest for price to potentially react from, right? Here we see New York Killzone starts this period, yeah. And then this is where it ends. Okay, so I actually just want to put maybe a vertical line on here. Cool. And then I'm just going to turn this indicator off. Okay, so this blue line is New York Killzone. In South African time, it's 1 p.m. in the afternoon, right? So, like I said in the beginning of this video, if you're trading gold, this is really the optimum period to trade, to look for trades, trade setups to form, because on most days, I would say 80 to 90% of days, the major move occurs in this period on gold, right? So here we see gold, we're making higher highs, right? Here's a high, high, higher high, higher high, higher high, right? Cool. We can also see, I'm not going to really explain this too hectically, but I'm sure many people do know about divergence. Yeah, I just opened the RSI. If you want to know about divergence, watch the video. Like just check YouTube, look for RSI divergence or something like that, divergence strategy or something, if you want more details about what it is. But what we can see here is that the price is making higher highs here, right? See, here's a high, higher high here, higher high here, then a higher high. So the highs are getting higher, yeah. But now if we look at the RSI below, when we look at the highs of the RSI that's associated to these highs, so we look directly below the price chart onto the RSI chart, and what do we see? So this high here is associated to which high? Basically these highs over here on the RSI. And then we take a trend line, right? And we see this high here is associated to which highs on the RSI? This one, right below it. So what do we see? We see that, okay, the price chart is making higher highs, but the RSI is making lower highs. So that's divergence basically. It's an indication that price is manipulating. Though it's moving higher, it's indicating when the RSI is showing a inverse trend, it's indicating that this trend is actually weakening, and at some point price could potentially reverse. Okay, so that's just a little bit of something that you guys can maybe look into. This is on the 15-minute. RSI can be used on all time frames, especially if you know what you're doing. You can use it on like 1 minute, 3 minute, 5 minute for entries, and it can be extremely effective, right? Okay, so yeah, from here it's quite straightforward, really, because we have multiple breaks when we come lower. We have multiple breaks when we come lower. You see, we break. We break these lows first, and then we break these lows, and then we break these lows, and then we also break these lows, right? Take that RSI away. So yeah, we see multiple shifts in market structure. This being, you can say this is the first one. How do I identify that one? Okay, well here we can say it was a high that was created. So yeah, price forms a high, we make a higher high, right? This impulsive move that breaks this high originates from here. See, it impulses from there and makes a higher high. Now price wicks below it. It actually gives this is the initial market structure shift. On the 5 minute, we can't, like a lot of people would say, okay, but that's just a wick. It's not a closure below. Yeah, it's not a closure below, but price still makes a lower low. If we go on 1 minute or lower time frame, we're going to see closures below here. Then we proceed to break more lows. So we break this low, we break this low, we break all of these lows, and then we can say this is a intraday low, I would say. Not the low of the day, but I would say a more significant low for a market structure shift. So here we have, this is the high, right? So the impulsive move comes here, breaks this high. Eventually price comes down, breaks this low. So we can actually say this is a significant intraday shift in market structure, right? Cool beans. And when does this occur? Remember, this blue line is Neo Killzone, the Forex Killzone. If we put this indicator back on, we can see here, it says here, Neo Killzone starts. So from this period, this is when you want to sort of, look for the trade to form. So based on narrative, remember we looked all the way down somewhere lower. We broke a significant low and then we retraced above liquidity and we came into this point of interest that we refined, right? Yeah, also on the RSI, we saw good divergence because the price was making higher highs, but the RSI was making lower highs, indicating that these higher highs into a valid bearish point of interest indicating manipulation, and that once price starts to shift to the downside, it gives good confluence for price to trade lower. And yeah, what else are we going to use to form this trade? Well, like I said earlier, the fib is your friend. The fib is your friend, because remember here we had a higher high. So let me actually make this a break of structure. So this is a break of structure to the upside. BOS. So here we have a break of structure to the upside, right? The impulsive move comes from here, and we break this low. Break it, right? This, if I'm not mistaken, is the low of the day. Let me just check this out. Yeah, this is Asia low, which has not been taken yet. Always a good sign when Asia has not been taken and there's confluence for it to be taken. So this would have been a target, right? Asia low. So let's actually put that in there also. Asia low. Cool. Asia low swept. I mean, it was eventually swept. And then, like I said, the fib is your friend. So I'm using the magnet. It's just okay, cool. So I'm taking it from this high to this low, right? So here we see where does price trade into? Right back into this, or trades into, you know, the golden zone, 61.8 to 78.6, right? But we can look for some refinements. We can look in this area to see, are there any unmitigated zones, right? So we're looking here. Take the fib away. And what do we see here? So here we have that market structure shift when we break lower here. So do we see any significant fair value gaps or anything like that? So I'm seeing a few. I'm seeing this one. What is the problem with this one? Well, it's quite low. It's not at a good premium. Remember, if we want to sell from a high price, being a premium price. If we take the fib again and we look, so it is above the 50%. Yeah, this point of interest here, it is above the 50%. But just because it's above it, there's still more premium. This is optimal. These zones here, higher up. So let's see. Okay, let's take this box away. We don't need that one anymore. Besides that, what else do we see? If we just look closer to see, do we see any other points of interest? Unmitigated zone. So we had this one. We did have a decent reaction from it. You see, tap into it. We have quite a strong reaction. I think we move. That's not bad. It's about 40 pips down from there. The next one being what? If I'm looking here, all of this is mitigated. All of this is mitigated. But now this is not mitigated. I'll show you guys how I identified that. Above this wick, fair value gap, order block, right? Pull it across, and we see mitigation right there. If we look above it, there's also a little bit of an unmitigated fair value gap here, right? But this has been traded too efficiently, because if we look here, you see here's the initial market structure shift, which I showed you guys, right? We broke this low, but here we can see we traded here, and we traded quite high up. We traded to the optimal zone. Just take a fib and we look at it. We traded here to the 78.6. So we've traded efficiently in this zone. So it's really not necessary for price to trade even higher. If this only traded to maybe 50% and it left a big fair value gap here, then potentially price could have come up to mitigate deeper into it. And yeah, that's it, guys. I hope this video was short enough for everybody. I know lately I've been making videos, or I mean all my videos have been like, I don't know, 45 minutes or hour long. So yeah, I put a few interesting things in this video. If it was a bit quick, I'm sorry. I tried to make it short. but I had to go quite quickly as well. We could have spent hours on this, but yeah, I hope everyone found value in this. And yeah, look out for me to post more videos in the coming weeks. Hopefully, I can post another one in sometime this week, maybe next week. And yeah, we'll just keep the ball rolling. Otherwise, everybody have a good week. Have a good week of trading. And yeah, we'll chat soon. Cheers.